A very happy morning to all of you. We welcome you all again to the micro webinar series from Happy Valley Business School. I'm Beena, and I would be the moderator for today's webinar. And the webinar topic is masking your taxes. What else can we wish for but the best? We have with us Mr. G. Karthikeyan with us today for the webinar. Mr. Karthikeyan is a chartered accountant by profession. He is the managing director of GK Management Services, which has operations all over India and the US. I'm not sure how he manages with the same 24 hours that all of us have. In spite of his busy schedule, he finds time to be on all media. He is a columnist in the Business Line, Dinamalar. He is invited to talk shows across all TV channels, and of course, he is omnipresent on social media. And he still has time to be the president of the Rotary Club of Coimbatore. He was the founder president of TAI. He was and is he heads the taxation panel of CII. So he is Mr. Karthikeyan for all of us. Sir, before we start today's webinar, just a few thoughts. You know, Benjamin Franklin, way back in 1789, said, there are two things which are very certain. One is death, and the other one is taxes. And he was talking about all this when taxes were just 5%. And in the same 18th century, the infamous Boston Tea Party, where, you know, the Americans revolted around the British tax system. And you know what? And you know, it led to the American Revolution. And today, we have in India more than 40% as taxes. Is there any way out? Why is it that we hardworking Indians keep on paying taxes? The 4% is responsible to share the burden of the remaining 96%. Is there any way out, sir? Over to you, Mr. Karthikeyan.
Thank you, Bina. Good morning, everyone. In fact, first of all, let me express my happiness and gratitude to Happy Valley College for having initiated a program of this nature and inviting me to be one of the speakers. In fact, Happy Valley College, Happy Valley B School, I am associated with. In fact, I attended several of your programs. One of the most professional institution. In fact, it's not for the sake of saying. In fact, I need to congratulate the teamwork and the leadership that that is. Special mention to Dr. Kanagaraj, an economist who is very well known for his macro level thoughts and also micro level thoughts. Congratulations, sir. And Beena is a good family friend of mine, and many of you do not know that she's a very good host. And in fact, a couple of times she has invited a few dinners, and also she's a good cook. And thanks for the nice introduction, good words, Beena. Coming directly to the subject, with this introduction, I thought I could just come to the topic. And it is a good topic, how to mask your taxes. You know, during this COVID season, is it Mr. Vishal or somebody has coined this topic. It's a good topic. Congratulations. Only thing, how to mask your taxes or how to mask your income may not withstand the test of legality, because the masking is something not advisable, but tax avoidance is accepted. There are two types. One is tax avoidance and the other is tax evasion. The hardest thing, Einstein said, the hardest thing in the world is to understand income tax. And similarly, as Dr. Bina said, in this world, nothing can be said to be certain except death and taxes, said Benjamin Franklin. It shows how the taxes are perceived to be, though it is not so. Not that as a chartered accountant, I am saying that, but it is, once you just understand certain basic things, it's not going to be a tough situation, or it is not going to be a big challenge. Let me just, I understand this is a heterogeneous group. Therefore, I'm not going into in-depth on any particular aspect, but I'll just throw light, and I'll be very happy to take up the questions at the end of the session. Now, only 4.5% pay taxes in India out of 139 billion population. only 4.5% are paying taxes, which works out to 6 crore 77 lakhs 90,660. This is based on 2000 year ended assessment year 18-19 statistics. And we have our maximum rate as 30% tax rate. Um, in fact, Dr. Bina was mentioning that we have high rates, no doubt. But compared to most other developed nations as well as developing nations, our rates are, our taxation system is very convenient. How I would say, for the lower income people, and the tax rates can be, by paying 6%, you can manage it by having proper tax planning. That I will just come to it a little later when we come to the taxation plan. Then for the middle class, we do not have wealth tax, gift tax, etc. We do not have. And for even rich class, the higher end people also, we do not have this wealth tax and gift tax. Therefore, in most of the nations, estate tax is there. Estate tax is nothing but upon death of the taxpayer, his estate will be subject to taxation, which is working out to more than 41 percentage. In US and UK, it is just 41 percentage. The death will cost 41 percentage taxes. Therefore, in India, we had such tax. In '84, it was abolished. Of course, now there are rumors that it would come up. In the past 2-3 years, it has been going on that estate tax will be introduced soon. And even recently, one of the unauthorized release of the income tax proposals stated that we will have estate tax. But as of now, it is not there. And people who have got more than 1 crore income is 42,800. This is the rate. Let's say. Now, let us just look around. What are the taxes that is being paid by the other nations? In Belgium, it is 50%. Italy, 43 percentage. Greece, 45 percentage. Denmark, 55.5%, and France, 45%. The number of taxpayers also in most of the nations, developed nations, it is very high. Scandinavian countries has the highest tax rate, taxpayers, more than 80% taxpayers are there. Australia, more than 50%, US, more than 45 percentage. These are all the taxpayers composition. And coming to tax havens. Tax haven is nothing but when there is nil tax or tax rates are lower. Basically, these are all the countries where they trade on taxes. For example, Mauritius, most of you would have heard about Mauritius. Uh, People set up companies in Mauritius and thereby they reduce the taxes, and they again set up a subsidiary company in India. And the dividend distribution does not cost you anything. Luxembourg, Cayman Islands, Bahamas, Cyprus, Mauritius. These are all the nations that are considered as tax haven countries. There is nil tax or zero tax. Then low tax countries. These are all nil tax. Now we will move on see what are the low tax countries. For example, Albania, Bosnia, Bulgaria, Macau, Russia, Jordan. These are all the tax countries where they have 10% to 15 percentage. Of course, in Singapore, they say the popularity is 17 percentage tax rates. In India, also, they have brought the tax rates. Last year, during September, our finance minister came out with the slashing announcement on reduced tax rates for the corporates in order to boost economy. Of course, he addressed the supply side rather than the demand side. That is one criticism, but let us not look at it. But the tax rates, considering so new manufacturing companies, those who are fully involved in manufacturing, which is new, which is not split from the existing unit, they were asked to pay only 15 percentage. This is one of the major, we can say, even in US when Trump came to power, he made the tax rates to about 22 percentage, 23 percentage rather, a couple of years back. Therefore, the global nations are towards reducing the tax rates, though thereby the compliance rate will be very high, as well as the collection is also going to be very high. So this is on our tax rates. Now coming to zero tax rates, Oman, Qatar, Kuwait, because these are all oil-rich countries. Therefore, they do not charge any taxation on income, tax on income tax. This is what Dr. Subramaniam Swamy is also advocating for, because he largely bets on 4G income and 5G income, based on which he says that he strongly suggests that, recommends that India income tax should be abolished. But abolition of income tax is not an option in India. Reason being, it covers other illegality, I mean illegal means and all. Therefore, by abolishing income tax, there are certain other problems that one may have to encounter. Therefore, zero tax or abolition of income tax is not in my opinion, is not an option for as far as India is concerned. Though it's a popular request, it would be very well received. May not be. Now, let us just see the recent announcements by the finance minister and post-COVID situation. Then this pandemic situation has affected more than 210 countries, and death rate has been very high, and especially in US, it is very too high. And therefore, we need to see how the global countries react to it, and what is India's reaction to this situation. Though it is not directly connected to income tax, but I just thought I could just touch upon these points, and then we will come back to income tax. India's response, 24th March 2020, the finance minister came out with the first announcement, wherein she said that the GST filing has been extended from the regular dates to 30th June 2020, and which would cost 9% interest for the taxpayer for the delayed filing. As against the original rate of 12%. Similarly, TDS has to be deposited as well as return has to be filed before 30th June, for which again 9% interest has to be paid as against the original interest rate of 12%. Then filing of income tax returns for 18-19 extended up to 30th June. This probably many people have got confusion that this is some extension about the current year. No, it is for the year 31st March 2019. 31st March 2019, the due date should have been July, and extended due date without penalty is 31st March 2020. This date has been extended to 30th June 2020. One need to be aware that now the tax filing window is closed after that particular date. For example, for 31/3/2018, if you want to file, one wants to file the return, you cannot file so now, because the income tax department does not allow that. Rather, you can only respond to it by reopening assessment, like section 147 and 148 of Income Tax Act. Only you will be able to file it. Therefore, the window has been restricted. That's the reason this assumes a lot of significance. Then Aadhaar PAN linking has been extended up to 30th June 2020, and Vivad se Viswas, that is any pending litigation with the tax department, which is pending with the tax authorities, namely Commission of Income Tax Tribunal or High Court or Supreme Court, can be settled by a new program called Vivad se Viswas, which was introduced by the finance minister during the budget session in February 2020. So that has been extended till this year end. The tax payment has been extended. This is for academic interest, and some, of course, and other notices and other things will be extended. And customs clearance is there till 30th. 24/7 it will work. Finance minister on 26th of March again she appeared, and she said that she announced certain fiscal measures, namely 1.7 lakh crores announcements were made to under PM GKS scheme. 5 crore rurally employed people will get additional 2,000, and Jandan account women will get 500 rupees for 3 months time, and 5 kilos rice and 5 kilos dal, along with 1 kilo, 5 kilo wheat, along with 1 kilo dal for BPL people, and 8.69 crore small agriculturists will get 2,000 rupees. And this one may be interesting. Government thought that there would be a lot of job cuts as well as salary cuts. This is what my personal view also, because soon after this COVID is over, or rather the next 2 months time, one can see a lot of job cuts and salary cuts. Of course, now itself we will be seeing, but the magnitude is going to be a little different in the next 2 3 months time. This is my personal view. Therefore, in order to help those people, 75% of the advances can be taken from their account, PPF account, PF account, which can be used for their livelihood. This is what the government thought. Then they have allowed 75% advance could be drawn from the TF account. Then regarding PF and ESI, they have come out with another scheme called the above those entities with less than 100 employees, out of which 90% should be drawing less than 15,000 rupees salary. Their ESI and PF contribution would be borne by Government of India for 3 months time. Of course, this was extended 13th March, 13th May. Again, Finance Minister announced about several schemes in which she extended it till for another 3 months time. Then insurance to healthcare workers 50 lakhs and 8.3 lakh BPL people would get LPG for the next 3 months time. This is the second announcement on 26th March. Then 27th of March, Reserve Bank has come out with an announcement wherein loan moratorium, all kinds of loans, be it term loan or working capital or housing loan or mortgage loans, consumer durable loans, including credit card loans, to any banks, be it nationalized bank or private sector banks or any other banks, which includes national housing banks as well as NBFCs, would be given moratorium. Moratorium is a temporary suspension for 3 months time. 3 months time, one need loan and only interest is charged on this. Interest is charged. Interest on interest is also charged. What one should be careful about is the credit cards. The credit cards, the interest is calculated on a monthly rest. It is now as against the normal interest, which is calculated on quarterly rest. On monthly rest, when you just calculate, credit card, it will work out to 30 to 40%. So here one needs to be careful about it. Then RBI announcements too. It was announced on 17th of April. Reserve Bank has announced wherein NPA classification, standstill class introduced. This is for business community. So I assume there are certain industrialists also. That's the reason why I am trying to touch upon this latest topic, as well as touching upon the vital aspects of what one needs to know about. So NPA classification, standstill class is introduced. 29th February, whatever is the status, that would continue to be there. This is the NPA classification, standstill class. Then in order to infuse liquidity into the system, banking system especially, the Reserve Bank has announced 50,000 crores liquidity booster to NABARD 25,000 crores, so that the agriculture it's refinancing institution. NABARD is a refinancing institution. Once by infusing funds to the refinancing institution, they will lend it to the banker, and banker will in turn give it to the ultimate customer. That is the objective of this. So NABARD was given 25,000 crores and 15,000 crores to SIDBI. Thereby, MSMEs will be kickstarted, and 10,000 crores to NHB, National Housing Bank. Therefore, housing sector will be kickstarted. Then liquidity coverage ratio to scheduled commercial banks has been reduced from 100 to 80%. This will enable banks to have additional liquidity. Similarly, reverse repo rate. During even 27th April, Reserve Bank announced about 3 measures. One is CRR, cash reserve ratio. They have reduced cash reserve ratio, and repo rate and reverse repo rate. Repo rate is linked to our loan rates. Reverse repo is the banks, whatever surplus they are having, they use to deposit with the Reserve Bank of India. Instead of lending, infusing, or deploying, all the banks comfortably kept it with Reserve Bank of India. That way, they get their own revenue, and so the Reserve Bank thought it appropriate that it should be deployed properly in the banking system into the public. Reversed the repo rate by 0.9%. Now again they have reduced by 25 basic points from 4.9 to 4 in first instance, then 4 to 3.75. These things would enable the bankers to have adding more funds, which will help them to deploy it to the needy and priority sectors. Then ways and means advance to state government has increased by 60%, and banks not to declare dividends. These are all the announcements made by Reserve Bank of India in their second announcement. So this is about the recent announcement on COVID. Uh, and of course, latest one I will say it a little later also. Then so when we come to the know your ABC of tax provisions, uh, basically, be it I understand that the viewers, most of the viewers are either from small business houses or salary income, people having salary income. So I thought I could share some thoughts on the knowing your ABC of tax provisions. See, always it is not that taxation. Benjamin, for a scientist it may be Greek and Latin, but for people like us, including you, some basics you should know. We cannot just compare with Einstein or Benjamin Franklin and say that this is something not going to make it, so therefore I do not know. This is something then only you will be able to understand how to deploy your funds, how to maximize your revenue, how to reduce your tax liability. So these are all the basic things that you should know. No doubt you can seek the guidance of your auditor or some experts. Yet you should know certain basic things. So I thought I could this is one thing that I thought I could share. For example, for a typical case, I would say, now the income tax, last year income tax, there is a change in the tax rates. The finance minister has come out for the assessment year 21-22, namely this year. It's applicable from April 20 to 31st March 2020. There are two types of slabs. In order to have the taxpayers more funds, let's say somebody who does not want to invest in tax saving schemes, that includes ETC benefits or other tax saving benefits, they can pay a lower rate. See, as against the normal tax rate, yes, all of you know that 10%, 20%, 30%. Up to 10 lakhs, it is 10%. 10 to 20 lakhs is 20%. And 20 lakhs and above, I mean, up to 5 to 5, 10 and 50, above 10 lakhs, it is 30% tax rates you just have. Now, they have reduced it. They have made different slabs. Up to 5 lakhs, 5%. 5 to 5 lakhs, it is 10%. And 7.5 to another 2.5%. For 15, above 15 lakhs, one has to pay 30% tax rates. But you are not eligible to take any of the benefits under Chapter 6A. Chapter 6A is nothing but Section 80C, your popular PF, ESI, PPF, etc. And also any of the schemes, that any of the benefits. House rent allowance you cannot take under Section 1014. This is the new methodology. So now, in order to work out your tax liability, for example, now you are supposed to give declaration to your employer before the month of June or so. You have to declare June, July. You have to suppose declaration at 12 BB, Form 12 BB. You have to say what is your income and what is your proposal. Now you need to understand which provision you are going to go, whether old provision or new provision. Again, let's say 2-3 family members are earning members. One can start investing and take a old provision. The other person can take the new provision, without any exemptions. You can go for the direct tax provisions. Therefore, you need to understand. You need to work it out. What are the tax slabs? How that system works? The basic things that you are not supposed to see. Also, whenever you want to invest, you should know it is just based on the profile, of course, age profile. How many more years? Let's say somebody is in the verge of retirement, he can choose a different option. If somebody has joined recently, they can choose a different option. But general class would be exempt. You would have seen, meaning when you invest, it should be exempt. When the interest comes, when you get some revenue out of it, it should be exempt. It should not be taxable. Similarly, when you receive back the capital or principal, that should also be exempt. For example, what you can think of that, which provision or which investment will give this kind of benefit? The typical example is public provident fund. When you invest it is exempt. It gives you exemption to Section 80C. The interest is totally exempt under, the interest is not taxable. Then when you get back the money, it is exempt. So this is something uh, you need to look at options where you have got this kind of facility. So exempt. So therefore, knowing your tax provisions is very, very important. Uh, there are certain similarly house property, of course, up to 2 lakhs self-occupied property, there is no, you can offset it against your interest in, interest income is exempt. And if you have rental income, it is interest is permitted to be set off against the rental property. Earlier, the minus income was also allowed to be adjusted against your other income. Let's say you had minus, let's say you have paid interest 7.5 lakhs and your rental income is 3 lakhs. That 4.5 lakhs could be offset against your salary or other income from other sources. You can, but now 3 lakhs means you have paid 7.5 lakhs interest, only 3 lakhs is exempt. Up to 3 lakhs you can offset. Balance is you have to carry it forward. So the basic provisions, changing laws, changing regulations, changing guidance, you have to keep understanding that. The next is cash is king, accounted cash is Maharaja. It's nothing but, during this period, liquidity is the most critical thing. Probably any of the seminars, wherever you go, liquidity is the most important thing, because you never know when the COVID situation will change. And even, in fact, I was surprised to see Nidhi Aayog report a couple of days back in Malayalam Manorama. They said that Nidhi Aayog report says that the COVID affected number will be about 4.25 crores during August middle. It's nothing. It didn't come from a different person, Nidhi Aayog. So nobody is sure how it is going to be, how we are going to be. And after 1918 swine flu, the second wave only, it affected a lot. Therefore, nobody is sure. Therefore, that's the reason why pundits say that you have to preserve cash. Cash is king. Liquidity is, instead of investing now, you just wait for some more time, be it shares, be it mutual fund, be it anything. Of course, it is, though our district is over, therefore that is the reason liquid cash is, cash is very important. Now, accounted cash, of course, this is something informal forum. Therefore, I'm saying accounted cash is the companies. There are several companies, they have cash, but it is not shown in the books of account. Therefore, accounted cash is also very important. Whenever you go for a term loan, bank loans or investor funding, then accounted cash is very, very important. They don't, they know you make profit, but still whether it is there in the books or not. So accounted cash is also very, very important. That's why I say it's Maharaja. Then, of course, for lack of time, I do not want to go in depth on it. Then business, including MSMEs, just the 13th of has come out with announcements, out of which 6 were for MSMEs and some for micro units, some micro units and NBFCs, some on PF again. The 10 to 12 percentage, which will be relevant to most of you, are out of 12 percentage, 2% will be borne by government, and it will be deposited in your PF account. This more than the employees, it will help the employers. Because it will give some sort of liquidity in their hands, and working capital will be helped on that. Then for income tax, just probably what we may need to know is just few suggestions and a few income tax notifications came. One is TDS. TDS is whatever the employer or the deductor, whenever he deducts something, the tax rate is, let's say contract is 2%, 1% and 2%. Let's rentals, for rentals it is 10%. You need to deduct 75% of the normal TDS, and 25% is waived. Meaning, if 10% has to be deducted, you can deduct 7.5%, and 2.5% need not be deducted, and you can pay it to the deductee, which means the deductee will have a lot of funds in his hand. At least government has estimated it to be 50,000 crores. This liquidity out of this will be 50,000 crores, meaning government thinks that it is 2 lakh crores is the total collection out of TDS. This is one thing. Then the return due date filing from 31st July, it has been extended to 30th November for all cases except those who are under tax audit above 1 crore turnover tax audit cases. They are supposed to file before 30th October instead of 30th September. They are supposed to file before 30th October. And assessment, the tax officers are supposed to complete the assessment for the year 31/3/2018 before 30th September 2020. That has been extended till December. And the next tranche also 31/3/2019, that has to be finished before next year end. So these are all the changes that the income tax department has introduced in the 13th May. So these are all the items that I thought I could share. And before completing, probably I would just say that in Tirukural 2000 years back, Thiruvalluvar said, "Iyattralum, ஈட்டலும் காத்தலும் காத்த வகுத்தலும் வல்லது அரசு." Meaning, the role of a king is to make sure he earns, not only earns, but protects it, not only protecting it, but multiplying it, not only multiplying it, applying it for appropriate causes. This is the meaning of this Tirukural. So this is not applicable to the king, but also to every house owner and every taxpayer and every person who is earning. It is very appropriate. Therefore, it is not that we are earning alone. We need to make sure how we are going to preserve it, apply it, multiply it. This is very, very important. And this testing days, it is all the more important. We need to see where we are investing our investments, whether it is going to shares or mutual funds or house property. Again, house property means surplus house property is not advisable nowadays because of the falling rental values. And if it is absolutely essential, you can go for a house property or an additional house property. Let's say somebody wants to have another property which is for their house members. Therefore, you need to be aware and whether it is the appropriate time to invest in gold. Gold, yes, again, gold two types, bonds or physical gold. Is a challenge. Of course, one can use cash and buy gold. I hope you understand. Similarly, ETF also, 8 years means 5 years blocking period, and rate of interest is only 2.5%. Whether it is good and how the gold rate is going to be under the situation. Next 2 years, COVID is certainly be there for next 2 years time. One has to start living with that. How you are going to manage, and then how post-COVID situation would be, how the dollar rate would be, because it has affected all the countries, how our economy is going to be, how our exports are going to be, how the other countries get up. Even though we may think that it is the most developed nation, Japan or France, but I'm just saying an example. How fast they are able to recover, whether we will be able to recover much faster than them, where our money should be deployed. These are all the questions that you need to answer yourself, and you have to be prepared for the testing days. Having said that, இதுவும் கடக்கும் பின்ன தமிழ்ல சொல்லுவாங்க. They said this will also pass through. So with this positive note, I once again thank the management of Happy Valley and the faculties of Happy Valley College and Mr. Muthu for nice arrangement on this technical support. Thanks, viewers, and I will be very happy to answer any of your questions, whatever little I know.
Definitely, there are questions. The way you were concluding, I thought you were leaving because it is time is up. We have a lot of questions, and I'll try to take a few. Since it's Mr. Prashant who gave up his first question, I will read out his question. So how are our authorities supposed to fight this pandemic disease with no money, and will it reflect in our income tax?
I'm sorry,
Sir, I'll repeat it.
Yeah.
He's asking, how are our authorities supposed to fight this pandemic disease with no money? Will it reflect in our income tax?
Yeah, it's a good question, Prashant. In fact, the apprehension is, the taxpayer, rich will be, or rich or the taxpayers, rather, as I was mentioning, 4% as the taxpayers. Whether the government will again come back on with that 4.5% of the people and charge them is a good question. Definitely, the government now said that they came out with the, there's young IRS officers. What happened? Out of enthusiasm, they have released it. They asked them to prepare the note, and they have prepared, and many of you would have seen that. It came without the authority of the top officials. Therefore, it included all these things, especially include introduction of estate tax, introduction of gift tax, heavy charge taxpayers. These are all the announcements. I mean, these are all the proposals by the income tax authorities. Then the department totally denied it. It is not. It's baseless, and I'm not. It is not from our department. Now the question is, the government has to manage it. When the government has to manage, probably one has to see. See, for example, the relief measures. When the governments announced relief measures, most of the nations announced uh, more than 10% of the GDP. Because only day yesterday or 2 days back only, our government has said that, or our prime minister said that he wanted to have a rhyme 2020. Therefore, he said that 20% we are coming out with 10% of the GDP. Before that, US has come out with almost they are now $3 trillion, meaning 220 lakh crores, 10 times of what we have done. And Japan has announced 20% of the GDP, and most of the nations more than 10%, in between 10 to 20%. So all the countries have announced. Now the question is, we are the fifth largest economy after India. I mean, USA, $21.2 trillion, followed by China, $13.1 trillion, then Japan, then Germany, and our India. We are close to $2.9 trillion. Now we are fifth largest, but are we not having money? No, we do not. We have per capita income is very low in our country. Per capita income is only Scandinavian countries. It is very high. Just to say, less small statistics, and then 60,000 per year average per capita income. Ours is hardly $1,280 per capita income. You can see the gap. You can see the difference. Now, so we don't have deep pockets. Having said that, most of the developed nations also, the debt GDP is very high. The debt versus GDP, that is the outside debt. It includes outside debt as well as internal debt. For example, in US it is 107 rupees is the debt, 100 rupees is the GDP. Example, 90 and uh, Japan has the highest, 230 rupees is the debt, which includes the domestic debt also. They have not gone for a external debt much. Domestic debt, 230, 100 is the GDP. Whereas in India, it is 67 rupees. 67 rupees is our debt, 100 is our GDP. Therefore, we have the ability to borrow more. It requires some bold decisions. For example, even the recent announcement also, there are several criticisms. Paying your refund, is it a stimulus? Yes, it's a very valid question. Paying your own money, which should have been done long back, when you pay now, how can you say it as a stimulus? So it is only, I would say, it's just a faster reaction to the situation. That's the only thing. It's not a stimulus. They have facilitated certain things. Similarly, as 5 lakh crores is the amount that are due to MSMEs. Now they are given 3 lakh crores loans, whereas the amount payable by central government as well as central public sector CPSUs is more than 5 lakh crores. Once they give that, that itself will be a stimulus rather. You can include that also. So therefore, government will not come heavily on income tax. Maybe the top higher taxpayers, yes, it may come. Probably some COVID cess could be introduced. However, the finance minister 4 weeks back she has announced that there would be an increase target of 4 lakh crores or so, in addition to what is already being for the next financial year. So next question, please.
Yes, sir. So I'm combining a few questions because we have a lot of questions. Uh, People want to know what's the difference between waived off loans and write off loans. If it is such a huge amount, why is the government writing it off when we don't have money? Why don't we go after people?
Okay, your question is, this is accounting methodology. See, when they introduced prudential norms by income tax department, by the bankers, Reserve Bank introduced prudential norms. That is income recognition and asset classing, IRAC. That's what popularly they say. You need to provide whatever is whatever you feel it is not appropriate. See the classification: performing asset and non-performing asset. For non-performing asset, there is no provision. Provision is just something in case if does not come, it should not affect you on a later day. Therefore, you systematically provide it in the balance sheet. That is known as provisioning norms. So the government has come up with the provisioning. For example, probably I assume you mean Nirav Modi and Kingfisher case. They have written off in the books of account. However, the collection mechanism will continue. Collection efforts will continue. Once collection is there, then they take it to income account. Therefore, it doesn't mean that they, by writing it off in the books of account, the efforts are ceased. Efforts will continue.
Thank you, sir. And Mr. Vishal has this question to ask. Reimbursement of expenses, for example, a travel allowance, is subject to proof of expenses. With lockdown, does this shift the nature of reimbursement to a taxable allowance?
It's a good question. Basically, yes, because any allowance or any expenditure, reimbursement expenditure is based upon spending. It is only, for example, let's say if it is a traveling expense, for example, those who are given in typical cases, so once you are abroad, they are giving per day allowance, per diem allowance. Is wholly exclusively for the purpose of meeting your expenditure. Then $100. And if you incur only $60, that $540 will be considered as your income. If you do not substantiate that it has been spent for to be your income, it would be considered as a perquisite. Therefore, you run the risk of being subjecting this to taxation. Having said that, now the department does not have all those time to follow it up. It is your probably your luck.
So I'll take the last question because is very sure that this question need not be or might not be asked. He is Mr. Sridhar from the School of Business Studies and Social Sciences. He wishes to know why is individual tax higher than corporate tax in India?
Company tax, corporate tax. Am I
Yes.
correct?
Yes.
Yeah. Because this is generally even for firms they have firms also raise this question. Firms LLP when the companies are given 25% tax reduced to 25, and a new manufacturing companies 15%, whereas individuals and other entities are paying 13%, 30%. Because once company company has to pay this tax. From company to individual, dividend distribution tax it was there. Now it is taken off. Again, individual, recipient hands, it will be taxable. Therefore, dividend, there are two layers. As far as company is concerned, two layers. Whereas if it is a firm, directly once a firm pays the taxes, and partners can draw it as a draw it against their share of profit, and it is not subject to taxation. Individual also, yes, it is not subject to two layers of taxations, such as company. Therefore, however, it is an anomaly, or the government has to address this. More than I will not use the word anomaly. There is a kind of it will be a incentive for the individuals. Therefore,
Thank you, sir.
government will consider it. Thank you once again.
Thank you so much, sir. There are so many more questions, but I think I will have to send it to you by email because due to paucity of time, we might have to stop the session right now. So I think tax is a very simple three-letter word, but it can get very complex. And thanks to Mr. Karthikeyan, he has made us slightly better off than Benjamin Franklin today. We did understand a little bit of tax implications. Thank you so much, sir, for being with us today, and thank you, participants. I think compared to all the previous two webinars, we have had maximum participation for today's webinar. So it's probably because of the fear of money and income and tax, and of course, the credit goes to the speaker, Mr. Karthikeyan. Thank you so much, sir, for being here. And participants, for your information, tomorrow we have another micro webinar series, which is on rebooting India with 20 lakh crores by Dr. Kanaga Sabapathy, who is the director of the Shipping Corporation of India Limited. So until then, thank you and bye-bye.
Thank you very much. Thanks, all. Thank you.